Welcome to Global Trends. Please subscribe and hit the bell icon for more breaking updates across Africa. Chinese investment is transforming the continent's infrastructure and global trade routes. China is building vast railways, spending billions to connect remote African mines to the sea. These projects are about more than tracks, they're redrawing the map of global resources. The goal: create new economic arteries to pump iron ore from Africa directly to China's steel mills. This shift is opening opportunities for African nations and surprising Western powers, who now see a new economic order emerging. For decades, China relied on Australia and Brazil for iron ore, leaving it vulnerable to price swings and political tensions. Now China is turning to Africa's untapped mineral wealth, especially in Guinea, Algeria, Tanzania, and Burundi. By building the infrastructure to unlock these resources, China is diversifying its supply chain and gaining influence over global commodities. We'll explore the scale of these railway deals, from Guinea's Simandou Mountains to the Sahara in East Africa, and see how they're reshaping economies. These steel veins are more than mineral routes, they're lifelines for jobs, trade, and a new vision of development. As China secures new iron ore sources, the world is witnessing a fundamental shift in how vital resources are traded and controlled. Deep in Guinea's Simandou Mountains lies the world's largest untapped deposit of high-grade iron ore. For years, this resource was out of reach. Too remote, too expensive to access. Western companies hesitated, but China stepped in with a $10 billion plan. The centerpiece, a 650-kilometer railway connecting the mine to a new Atlantic port. Thousands of workers, both Chinese and Guinean, built this corridor at record speed, transforming the landscape and local economy. By July 2025, the railway and port were complete, with the first iron ore shipments to China set for November. For Guinea, this project is a game-changer, creating jobs, revenue, and a stake in the infrastructure itself. It's a powerful example of China's infrastructure for resources model, unlocking mineral wealth and moving Guinea from potential to active participation in global trade. The Simandou project marks the start of a new era for Guinea's economy. China's railway ambitions stretch far beyond Guinea. In Algeria's Sahara, the Gara Jebel iron ore mine was long isolated, until China financed new railways to connect it to Mediterranean ports. In East Africa, a $2.15 billion deal is building a modern railway from Burundi's mineral-rich interior to Tanzania's port of Dar es Salaam. This line is part of Tanzania's broader standard gauge railway network, designed to move millions of tons of minerals and boost regional trade. The project is a collaboration. Chinese firms build, while the African Development Bank and European banks help finance. These railways promise to cut transport costs, boost exports, and foster regional integration. Together, projects in Algeria, Tanzania, Burundi, and Guinea reveal a clear strategy. China is systematically building logistical corridors across Africa. Each railway unlocks high-value resources for China's industry, while creating new economic pathways for African nations. This expanding network is a vision of partnership, built on infrastructure, resources, and shared growth. China's long-term strategy is reshaping Africa's economic landscape. China's new railways are engines of transformation for African economies. They create thousands of jobs, not just in construction, but in logistics, engineering, and support services. More importantly, they solve a core problem: poor infrastructure that has long stifled growth. With efficient railways, African nations can move minerals and goods quickly and cheaply, making exports more competitive. This new capacity turns natural resources into real revenue, funding schools, hospitals, and public services. Railways also act as development corridors, sparking growth along their routes. Farmers and small businesses gain access to bigger markets, boosting incomes and reducing waste. Enhanced connectivity strengthens domestic trade and regional integration, making economies more resilient. Shared ownership of railways and ports ensures host countries benefit from profits and control strategic assets. Increased export revenue reduces reliance on foreign aid and gives African leaders a stronger voice in global trade. These steel veins are laying the tracks for a more prosperous, self-sufficient future. China's rapid infrastructure for resources deals have jolted Western governments and corporations. For years, the West dominated African investment, but often moved slowly and cautiously. China's bold state-backed approach, building what others deem too risky, has changed the game. Western analysts now see a new model. China offers infrastructure in exchange for resources with fewer conditions. This appeals to African leaders eager for fast development and shifts political alliances toward Beijing. The West worries about losing influence and questions China's impact on governance, but African leaders often welcome the partnership. China's focus on building tangible assets, railways, ports, power, contrasts with the West's emphasis on aid and diplomacy. The world is adjusting to a new reality. China is now a major power shaping Africa's future. China's African iron ore investments are set to reshape the global market. For years, China depended on Australia and Brazil for most of its iron ore, leaving it exposed to price shocks and political risks. By tapping Africa's vast reserves, China is breaking this dependency. The arrival of Simandou's high-grade ore, followed by Algerian and other African supplies, will boost China's bargaining power and stabilize prices. New shipping routes will emerge, connecting West and North Africa directly to East Asia, diversifying global trade flows. Ports in Guinea and Algeria will become major logistics hubs, making the supply chain more resilient. For traditional suppliers like Australia, this means new competition and a permanent shift in market dynamics. China is moving from price taker to price maker, using its financial and engineering muscle to shape the market. This benefits not just China, but steel producers worldwide, by making iron ore more affordable and supply more secure. The global iron ore landscape is entering a new era, one defined by China's strategic vision. The new railways crisscrossing Africa are more than infrastructure. They're the foundation of a powerful economic partnership. China's investments have unlocked mineral wealth and provided African nations with the means to grow and diversify their economies. These railways connect communities, boost trade, and lay the groundwork for a more resilient future. While questions about debt and governance remain, the benefits are undeniable: jobs, revenue, and a new model of development. For China, this strategy secures vital resources and cements its role as a global economic leader. The West's surprise highlights the scale of China's achievement and the shifting balance of power. The railway deals in Guinea, Algeria, Tanzania, and Burundi are part of a far-reaching strategy linking the world's most populous nation with Africa's resources. This new iron artery signals a more complex, multipolar global order, one shaped by the ambitions of the global South.